It's been a while since we've talked about GameStop on this channel, so it's high time we check in on the company. At the peak of the short squeeze in early 2021, the share price reached as high as $80, adjusted for subsequent stock splits. Over the next few years, the share price has been on a gradual downward trend, and currently sits at $22. But this is still significantly higher than where it was before the short squeeze. Since 2021, GameStop has been controlled by the activist investor Ryan Cohen, who made his fortune by founding the pet-focused e-commerce company Chewy. Since taking over, Cohen has implemented numerous changes to GameStop's structure and strategy. In March of 2025, GameStop raised $1.3 billion via the sale of convertible bonds. They used this money to purchase 4,710 bitcoins. In this video, we'll look at what Ryan Cohen has been up to since taking the helm at GameStop, how the company has performed operationally, and why they're now buying Bitcoin. This video is brought to you by Differentiated Analytics, a website we created which provides premium short-selling research among other things. We identify companies we believe to be fraudulent or overvalued, and write professional-grade research reports explaining the bear case in great detail. Since we began publishing our research at the beginning of 2024, a hypothetical portfolio of our short positions has underperformed the S&P 500. We also have a public short report aggregator. Here we follow a handful of activist short sellers who we hold in high regard. Every time they release a new short report, we write a summary allowing you to quickly gain an understanding of the key points. Finally, we have a merger arbitrage table, which tracks all active mergers and acquisitions of companies listed on major US exchanges. All of this is available with a premium subscription to Differentiated Analytics, and for a limited time, you can lock in 50% off by using the promo code WSM50 at checkout. So if you're interested in short selling, make sure to go to differentiatedanalytics.com to sign up today. The link is in the description below. And now back to the video. Ryan Cohen started buying shares of GameStop in 2020. By December of 2020, he'd accumulated a 13% stake. In early 2021, he received board representation and thus significant influence over the company. In June of 2021, he fired GameStop's long-standing CEO and replaced him with a former Amazon executive named Matt Furlong. The idea was for GameStop to increase its focus on e-commerce as their in-store sales declined. In July of 2022, they launched an NFT marketplace. This was a total flop, failing to generate material revenue. By the first half of 2023, it became clear that their e-commerce and NFT ideas were failures, so they started drastically cutting costs in an attempt to reach profitability. In June of 2023, Ryan Cohen fired CEO Matt Furlong. He appointed himself executive chairman and later CEO. In May of 2025, GameStop announced its Bitcoin purchase, and also said they would start focusing on selling trading cards. Since taking over GameStop, Ryan Cohen has kept a very low profile, rarely making public appearances. The company no longer hosts quarterly conference calls, and no longer takes questions from Wall Street analysts. In terms of investor relations, they do the bare minimum required of them as a public company. They even replaced their investor relations website with an extremely minimalist format, with no graphic design of any sort. On May 28, 2025, Cohen gave his first public interview as CEO of GameStop. He spoke to Bitcoin Magazine shortly after the company disclosed its first Bitcoin purchase.
When I took over, the company was a piece of crap and losing a lot of money. The company was under a lot of pressure, moving from physical games to digital downloads. So you had to cut costs. You had to cut costs very aggressively and bring in fiscal discipline. And we did. And retail is a tough business, but it was a big focus on getting costs under control. You've got a lot of macro headwinds going against the company. You have a move from physical games to digital downloads, and we needed to get the costs under control, and also shift the business from being so reliant on video games to collectibles, which we've done. And so now there's a big focus on trading cards. We're doing grading in a bunch of stores, and we're selling a lot of trading cards, both in sports and TCG. But the company today is profitable in the US, and we've gotten our costs under control.
So according to Cohen, GameStop is facing difficulties as consumers increasingly opt to buy games online instead of in-store. This has left them with no choice but to close stores and cut costs. In 2019, GameStop generated $6.5 billion of revenue. In 2020, they were forced to close their stores due to the pandemic, resulting in their revenue falling to $5.1 billion. There was a rebound in 2021, but the downward trend continued thereafter. In 2024, they generated $3.8 billion of revenue, a decline of more than 40% compared to 2019. GameStop sells three main categories of merchandise. Firstly, the sale of hardware. These are video game consoles such as Xboxes and PlayStations. Secondly, they sell software. These are the physical game discs. The third category is collectibles. These are video game themed action figures and the like. All three of these segments have been declining, but software has been declining the fastest. In 2019, software represented 46% of GameStop's sales. By 2024, this declined to just 26%. Newer generations of consoles have more storage, and internet speeds have gotten better, so it's now much more convenient to buy new games as digital downloads instead of going all the way to GameStop to buy a physical disc. While the majority of GameStop stores are in the US, they also have stores in Canada, Australia, and Europe. Realistically, there's nothing GameStop can do to turn around its declining prospects. As the video game industry becomes more digital, there's simply no longer any need for physical retail stores. But most people only buy a new console once every 5 years or so. And you can buy consoles at big box retailers like Walmart or Best Buy, or even order them on Amazon. There's really no reason for a dedicated video game retailer to exist anymore. GameStop has responded by cutting costs and rapidly closing underperforming stores. Since 2020, GameStop has been closing stores every year. In 2024, the rate of store closures accelerated. By the end of 2024, GameStop had 3,200 retail locations worldwide, 42% fewer than they had in 2019. The store closures have not been spread out evenly. Since 2019, GameStop closed more than 70% of its stores in Europe. In 2019, 66% of GameStop stores were in the US. In 2024, 73% of their stores are in the US. GameStop discloses its profitability by region. Their European operations have been consistently unprofitable. It seems the company has given up on Europe and closed almost all their stores there. In 2019, their US operations were profitable, reporting a $33 million operating profit excluding impairments. Between 2020 and 2022, the US segment reported hundreds of millions of dollars of operating losses. In 2023 and 2024, the US segment returned to profitability. So how were they able to do this? This chart shows the financial performance of the US segment on a per-store basis. In 2022, GameStop generated $1.37 million of revenue in each of its US stores. By 2024, this had declined 28% to $980,000. Despite the steep decline in revenue, gross profit remained almost constant at $295,000 per store. As a percentage of revenue, gross profit increased from 21% in 2022 to 30% in 2024. As software sales have declined, collectibles such as action figures now represent a greater percentage of sales. Collectibles tend to have higher profit margins. The gross profit is the revenue minus the wholesale cost at which GameStop procures its inventory. They also have store-related costs. These include the cost of the real estate, employee salaries, etc. Store-related costs per store decreased slightly from $283,000 in 2022 to $241,000 in 2024. This may be the result of reducing employee hours or closing down certain stores that were more expensive to operate. But the biggest reduction in costs came from cutting corporate overhead. In 2023 and 2024, GameStop conducted massive layoffs of white-collar employees at their corporate offices. In 2022, they spent $408 million in corporate overhead. By 2024, this was more than cut in half, down to $162 million. The GameStop headquarters now operates on a skeleton staff, with the bare minimum of employees required to keep the company operational. If we divide the corporate overhead by the number of stores, the allocation decreased from $102,000 per store in 2022 to $40,000 in 2024. These cost cuts allowed GameStop's US operations to return to profitability, but just barely. In 2024, they generated $13,000 of operating profit per store, or about 1% of revenue. Closing stores and cutting costs is not a long-term solution. As consumers increasingly switch to digital downloads, revenue per store will continue to decline. Eventually, they'll run out of costs to cut and the company will swing back to losses. In an attempt to grow revenue, GameStop recently started a new initiative where they buy and sell Pokemon and Yu-Gi-Oh! Trading cards. Some people buy and sell these trading cards on the secondary market for purposes of speculation. But given the niche nature of the trading card business, this is unlikely to move the needle. During the short squeeze of 2021, GameStop took advantage of its elevated share price and raised $1.7 billion by issuing new shares. In 2024, GameStop saw its stock price surge again due to the social media activity of Keith Gill. This allowed the company to raise another $3.5 billion. As of the end of 2024, GameStop had $4.8 billion of net cash on its balance sheet. This raises the question of what to do with such a massive cash pile. It would not make sense to reinvest this money into the core business, which is declining irreversibly. Ryan Cohen decided to turn GameStop into a Bitcoin treasury company, similar to MicroStrategy. But just using their current cash pile wasn't enough to satisfy Cohen's ambitions. On March 27, 2025, GameStop raised $1.5 billion by selling convertible notes. The transaction was initially sized at $1.3 billion, but it was later upsized to $1.5 billion. The convertible notes mature in 2030. They carry no interest but can be converted into stock at an effective strike price of $29.85 per share. At first, it wasn't clear what they would do with the money. 2 months later, on May 28th, they announced they had purchased 4,710 bitcoins. This purchase likely cost them approximately $500 million. This is less than they raised in their recent convertible bond offering, and they haven't even touched their original cash pile. So if they want to, they can purchase a lot more Bitcoin than this. So what's the endgame? Cohen was asked about the company's new Bitcoin strategy in a recent interview he gave to Bitcoin magazine.
Well, you also made some news about, a month ago or so, that you raised some money that you might use to buy Bitcoin. I guess the million-dollar question that everyone wants to know is, has GameStop bought Bitcoin?
We have bought Bitcoin.
Ooh. Okay, how much?
We currently own 4,710 Bitcoins.
Let's go. So tell us about that. Why did GameStop decide to buy Bitcoin?
It was, if the thesis is correct, then Bitcoin and gold as well can be a hedge against global currency devaluation and systemic risk. Bitcoin has certain unique advantages compared to gold. The portability aspect of it, it's instantly transferable across the globe, whereas gold is bulky and very expensive to ship. The authenticity, it's instantly verified via the blockchain. The storage, you can easily secure Bitcoin in a wallet, whereas gold requires insurance and it's very expensive. There's the scarcity element of it as well. There's a fixed supply of Bitcoin, whereas with gold, certain technological advances, the supply of gold is still uncertain. And then ultimately, there's the asymmetric upside. Gold is a more mature market. It's sort of roughly around 20 trillion of market capitalization, whereas Bitcoin today is about 2 trillion. And if the thesis is correct, then ultimately Bitcoin becomes digital gold, adopted, then there's more upside. But we'll see what happens.
There's really no strategic rationale for GameStop to purchase Bitcoin. Ryan Cohen is just hoping that the price will increase. Investors were not impressed by the company's Bitcoin strategy. On the day they announced their Bitcoin purchase, GameStop stock price declined 10%. On June 12th, they announced they'll be raising $2.25 billion by issuing another convertible bond. They will possibly use these proceeds to buy more Bitcoin. On this news, the stock plunged more than 20%. So where does GameStop now stand from a valuation perspective? As of the end of their fiscal first quarter on May 3, 2025, they had $6.4 billion of cash on hand. Subsequently, they spent approximately $500 million to acquire Bitcoins. They then sold $2.25 billion worth of convertible bonds. So as of the time of recording this video, their cash balance is approximately $8.1 billion. They now own 4,710 Bitcoins. Based on the current Bitcoin price, this is worth $498 million. They have 2 tranches of convertible bonds. If we add up the value of their cash plus the value of their Bitcoins and subtract the value of their outstanding bonds, the net asset value is $4.9 billion. They have 447 million common shares outstanding, giving a net asset value of $11 per share. But what about the core business? How much is a business worth that's barely breaking even and experiencing an irreversible decline? Probably very little, if anything. As of the time of recording this video, GameStop shares trade for $22 each. This is almost exactly double the value of their cash and Bitcoin holdings. Ryan Cohen probably hoped that his recently announced Bitcoin strategy would catalyze investor hype and increase the share price, thus allowing GameStop to continuously issue shares at higher prices to buy more Bitcoin. He was trying to recreate the MicroStrategy playbook. But 4 years after the initial short squeeze, investors have grown bored of the GameStop meme trade. The Bitcoin strategy relies almost entirely on investor hype, and for GameStop, it looks like the hype has finally run dry. Alright guys, that wraps it up for this video. What do you think about GameStop? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.